just a quick look at the overall kind of, actually, you know what? We'll do our all markets view just for a second, just to take a look at where we're at starting out the week. We've got gold higher. Gold absolutely ripped on Sunday open and continues to be a serious market mover. Meanwhile, the S&P 500, Dow Jones, NASDAQ, and Russell all starting out the week with some gains. The dollar index actually, was this Sunday? Yeah, it was. Dollar index actually gapped higher, filled that gap, and now sort of holding steady. So dollar index looking interesting here this morning. You've got oil continuing to push higher up to 72.40 or so. And then Bitcoin all over the place. So interesting start to the week, but yes, markets are moving already. You've got, again, S&P up about 0.5%, NAS up about 0.8. You've also got gold up 1.5% here this morning, guys. 1.5%. That's a pretty substantial jump for the price of gold just to kick off the week. You've also got silver looking good. And I'm loving the metals, but not really at a place where I can actually take a trade on them. So I'm just going to go right to where I am looking for setups, which is going to be gold. I do like gold quite a bit to the long side. Love the technical setup, but I can't justify doing anything here. And I'm going to go ahead and predict something here. Most likely this week, I'm not going to get any entries on gold. And most likely this week, I'm going to say the same thing 700 times, which is I like gold long, but got to wait for pullback. I'm probably going to say that 5,000 times, and that's okay because, I repeat myself very frequently on this channel and stream because guess what? Trading is just repetitive. Trading is incredibly repetitive when you're sticking to a system. So I am interested in gold. I know there's going to be people out here. Let me tell you right now, there's going to be a lot of people who say, I'm going to short this back to this pullback because it's going to pull back. Now, when you see me draw this idea of like, oh, I like longs if we get to 38.2, I am not, and absolutely adamantly pointing out that I am not saying, oh, I think the market is going to go down and then I'm going to buy it because then I think it's going to go up. It's a small delineation. I don't even know if that's the right word, but distinction. I don't know. It's very important that we understand something. Just because you might be bullish on something does not mean that it has to pull back after a big run. And you're going to hear a lot of people say like, oh, markets, they move in waves. So why don't you trade the wave back down? This has been the age-old debate and argument on trading world communities forever. Should you trade the pullback? And you should trade what you do and what you backtest and what you find profitable in your trading style. Look, I don't know if gold is going to pull back. We might not get a pullback. And that's a very important distinction to make. What I'm saying here is if this thing rips to 3,000 and then pulls back, we may never come back to this level. We may, in which case that gives me an opportunity. We might. Never say never. Markets are not fully predictable, right? Markets are actually incredibly difficult to predict. You could have something that comes out this week that absolutely tanks the price of gold for a couple days. But I'm going to look for an opportunity to get long gold if it gives it to me. And if it doesn't, I'm gonna tip my hat and say congratulations to the bulls, but I am not in that trade.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So TLT was a trade that I liked. It goes alongside the yen kind of concept. If you guys are regulars, you know that the yen has actually been getting some very bullish readings on the edge finder. Now, of course, it's being read as very bearish because why? It's saying bearish pound, bullish yen, right? You have to flip it around for currencies. Bearish CAD, bullish yen. Bearish dollar, bullish yen, bearish Kiwi. For the currency traders, that's how we read that, right? So some yen strength. Why am I pointing out the yen in relation to TLT? Well, I've been talking about this a lot. TLT and the yen are very correlated. I'll do my quick thought experiment that I've been showing. Check this out. We're looking at JXY. This is the Japanese yen currency index. Keep your eye on that for a second. I'm going to switch the chart on you. Ready? Here's TLT. See that? They move pretty closely together. It is a bit of a risk-off play to be long TLT or long Japanese yen. But there's a bit of something, there's something in there that I want to discuss. The Japanese central bank is talking about hiking rates for the first time in quite some time. They're really aggressively trying to get hawkish. Meanwhile, other central banks in the world, key Western countries like the UK, the European Central Bank, and the US Central Bank, the Federal Reserve, they're all talking about cutting rates. So that divergence looks really interesting to me. I'm not necessarily bearish the dollar, but I am kind of cautiously bullish the Japanese yen. So with that bullishness on the Japanese yen, like I said, I bought TLT. I continue to have a position on this one. US stock market just opened up, so we're getting some increase in volume. Let's take a look at that. Really choppy stuff here for the indices. You'll notice too, if you are an Edgefinder user, that we've got no indices currently on the bullish side at this time. In fact, our watch list has really thinned out here to start the week, keeping things pretty simple here for us. But I still like silver and gold, looking for pullbacks on those. So my job today as a trader is pretty easy. I'm gonna continue to watch that TLT trade, which is a play sort of on the Japanese yen. I'll also look for the currency pairs to trade into some levels I like, but I'm trading TLT. I'm also looking for pullbacks on the metals. Other than that, I don't really have much going on. So, yeah. So I like the Japanese yen play. I'll be looking for that. NAS actually holding up really well here today. Look at this, NAS up 0.9%, almost a 1% gain. That's following a pretty steep sell-off on Friday, but this market just choppy, man. Just not decisive at this time. Again, I'd like to see a more decisive breakout to the upside in order to get long, or a larger pullback, in which case I'd probably sell some puts on stuff that I like to hold longer term. I put together a little fun watch list in my list here. Where's my watch list? Stocks, ETFs, retail stocks. How can where's my open list? There it is, investments. Let me add that to list. Okay, so I put together this list here. Look at that, Nvidia's up nicely today. I have an Nvidia trade that's going really well. These are all things, everything on this list is stuff that I am possibly looking at for super long-term plays. Tesla, I've owned Tesla off and on for years. I've traded in and out of Tesla for some time. I might actually get assigned on these. What is this? February 28th puts. Very interesting. What's TLT? TLT is a bond market ETF. So basically, it is a collection of bonds, essentially. So why would you trade bonds? Well, if you are somebody who watches the Fed and central banks and macro stuff, bond traders are like the most boring, but also I love like focusing on yields and dollar and macro stuff. It's one of my favorite things to trade. I trade, what I trade the most is probably NASDAQ and gold, S&P, Dow, Russell, silver, oil, Bitcoin, TLT. I mean, that's what I trade the most. I also trade some currency pairs, but it is a minority of what I actually trade. What I love about TLT, one of my favorite things about TLT, guys, if you are somebody who likes to trade, if you are really like me, you focus on the US dollar, you may or may not realize this, but TLT might be for you. You know why? Think about this. If you want to trade the dollar, what can you do? Well, you could go trade the euro against the dollar, but now you've added another piece to the puzzle, right? You've added the European economy to the picture. If you do pound dollar, you added the UK to the US dollar. Now you got to focus on the UK and the US, or Europe and the US, or Japan and the US, right? You have to focus on both. What I like about TLT is that it is a bit of a, not by a ton, but it is a slightly more, because TLT bonds are still, global focus, but they're very US centric. And I like that about that because I focus a lot on US data. It's just what I study the most. And because I focus on US data so heavily, I like TLT because typically this is very responsive to US economic data. Ivan, talk to me a little bit about this week. We've got a pretty big week in front of us. We've got CPI numbers, the producer price index numbers. Powell is speaking a couple times. You got the sunglasses on. Clearly, it is a big week. That's how I know it's a big week. Is if the sunglasses are on, we got something cooking. So set us up for this week. What are we watching for?
Inflation. Does it go higher? Does it go lower? And I don't think that Trump's kind of impact on the S&P on the inflation is there yet, but I'm definitely watching the dollar index and has made like a small little bullish attempt to a reversal. So that's what I'm looking at this week.
Okay, yeah, no, I mean inflation. The Friday University of Michigan inflation forecast spiked, causing some dollar strength and some worries in the risk asset department. Do you think that is worth really paying attention to, or is it really just all about CPI this week?
I think it's all what do you call it? It's all a bit of a sum in summarium, if that is even a word in English. It's what do you also. We have a bit of issues. I'm just going to find the heat map. So we have quite high relative CPI. We have somehow elevated. Okay, not that much, but still, the NFP on Friday was above 100K. And then you have core CPI, and you have other things that and even manufacturing PMI and services PMI are all above 50. So we still have a lot of bullish, in my view, bullish indicators for continued dollar strength.
Yeah, I mean that's the thing is this week, and little tricky component of this heat map too is you actually, if you're a dollar bull, you want all of the inflation readings to go red, which would indicate hot inflation. It's a little bit confusing because the heat map is specifically built for if you're looking at this and you say, okay, this data going hotter, PPI year over year, core CPI, CPI year over year, core PC. If these numbers came in higher than expected, these would actually turn red, which would be bearish for stocks. That's the way to read that. Is this bearish for stock, but it'd actually be bullish for dollar. So yeah, no, I mean, that's the thing we want to look at here, guys, is this heat map has been changing colors pretty aggressively. We've seen a lot of stuff go from, it was pretty much all blue the other day. And now we've seen GDP numbers kind of slip in. You have services PMI last week was a big miss. Retail sales were also they were soft. And then you had jobs numbers came in a little bit light for the headline. We're missing revisions here. I'm considering adding revisions to this page. And then, we have also unemployment claims that was pretty much flat. ADP was a little better than expected. JOLTS was light. But just going through this, you can see it's more of a checkerboard than it was a couple weeks ago. A couple weeks ago, you just had clear dollar dominance. Now you can see the chart has actually reflected this mixed sentiment. We've now just gone sideways, chopping around for the dollar index. So I agree with you. I mean, this week is all about inflation. If you get a really strong inflation number, meaning higher than expected, it could relight the fire here a little bit for the dollar bulls.
Like, also, what I mean, and I have to add that to your analysis is, yes, we have the actual number, so we have the expectation. That's just for that day. That's the burn for that day. But if you go overall, you still have average hourly earnings is about 4%, which is inflationary. You have, for that matter, an employment rate at 4%, which was more people got a bit more jobs. And on-farm payrolls, and the revision was from 256 to 307. So that was a 50K uprise to me, which is bullish. But then this month was only 143, a bit less than expectation. But that's a low number, but still within whatever we have still within the margins of error as of lately.
Sure. Yeah, no, I mean, that revision on Friday was really worth noting. And a lot of people, there wasn't a ton of coverage on that. A lot of people really quickly focused their attention towards the Michigan stuff, and also the Trump tariffs and the retaliatory tariffs and all that stuff. Everybody kind of very quickly shifted off of jobs. But you made a really good distinction there that I think is important for everybody to recognize. Yes, you missed this red dot, guys. That's your expectations. That's what forecasts were. So yes, we came in light. So you say, oh, we had bad jobs data. But as Ivan just pointed out, this revisions line is very, very important. We revised this number from last period higher. So that gap is actually a bigger gap than this. It's a quick way to read it. We actually net had a lot of jobs gain. So jobs data was pretty strong, I would say. And you also mentioned, very importantly, the wage growth. And this is what's moving markets here a lot recently, is the inflation concerns. Well, wage growth in the United States is not falling. It's actually staying very strong. So you're seeing wage growth, which is inflationary because more people getting higher pay. That equates to prices of goods typically rising as well. So we've got a story here this week where if you see a big swing and a miss on inflation data, if you have CPI and the PPI numbers come in hot, that could easily spook the market going forward. If we let's take a look at PPI specifically, because it has this cool chart. Last time around, we had a light print, meaning this populates as red. If a number comes in hotter than expected or higher, it comes in blue. If it comes in lower than expected, it comes in red. So last time we missed and the market celebrated that. What happens this week if we resume this trend, which was higher than expected than forecast? So very important to watch to see how that impacts markets this week.
I wanted to pull back on the yen pairs this week. I was just told to go to 10-year. I'm just trying to figure out the gold in my head. So two things at the same time. So just to clarify, when I say it's because of Trump, it's the reaction of other countries, other people outside of America flying to gold because they will see less profits, or governments will say, okay, thank you very much. Or other countries would say, okay, we're going to have less trade. How do we secure ourselves? It's not necessarily America as a Trump. It's how do people react to that kind of protectionism, and then they will respond. It's a game of checkers or chess. I want S&P USDN to a bit higher and then fall, but I am definitely on the bullish side. I'm a bit anchored myself for not being a part of it, but that's the direction we are going with the proposed another increase of interest rates this year. Also, given that that we have 2.9 or so inflation going up to 3. In Japan, we're knocking on the ceiling of we should increase interest rates again.
Yeah, very interesting. And I mean, when we look at the yen and we say this thing has really broken some of the recent momentum, here's a Japanese currency index, breaking out on multiple kind of ways of looking at this. We've got some momentum here to the Japanese yen that we haven't seen in some time. I mean, the yen has just been the receiver or the butt of the joke for a while. I mean, Japanese yen has just been sold. But now that other central banks, I talked about this earlier in the stream, now that other central banks are looking at cut rates, I mean, look at the UK, right? They talked about, they're very dovish last week. You also have the Fed that does seem still poised and wanting to cut rates this year. With some of the recent data, you could still see how that's possible, right? You've had jolts coming in low and several reasons that the Fed may cut rates this year. I guess inflation this week is very important to that story as well. But point is, the two directions are very interesting. Japan looking to rate hike and most other Western countries looking to cut rates. So that divergence creates some very interesting trends in the currency market. Dollar yen, what was this kind of easy passive uptrend for so long, I think is kind of coming to an end. Even if we don't necessarily see the yen dominate currencies for years to come, I wouldn't be surprised if we just enter more of a long-term range environment rather than just what we have been, which was this, like I said, this kind of easy never-ending uptrend where Western central banks were actually the ones hiking rates, and the Bank of Japan was holding steady.
At at negatives, by the way.
Yeah.
About Trump accusing China of devaluing their currency in Japan. Yeah, China did that as a counterweight during the trade wars to make sure that they still sold goods and services to China, no, to America and to Europe. So that isn't a new. That's not a new, new thought. but yeah, I can confirm that was their strategy. So for me, dollar yen, lower yen strength, it's a bit of a emotional roller coaster. I have to agree that it's not as it's always been just by the bottom and it will go higher by itself. It's a bit more of you just think twice about what you're doing, because by the way, they're still spending whatever 48 trillion yen a month trying to buy bonds.
Yeah, no, it's a fascinating story, just the divergence between the two places, and we'll have to see where that goes. Another currency pair I wanted to ask you about, Ivan, is the dollar CAD. So dollar CAD, just the fundamentals of these two places, right, with the tariffs stuff being so interesting. Do you think dollar CAD has potential room to the upside? I lean a little bit more bullish on this pair specifically because if there is tariff stuff that happens, I think that it affects Canada more negatively than it does the US. What do you think about that?
Absolutely. Canada is a smaller economy, and they are heavily integrated. Any disruption into trade is a disruption to Canada, not because it's an exporting country, and I can't remember exactly how much of the GDP is going to America, but there's a lot of trade. So if that is going to happen and they target key income for Canada, definitely CAD is going to feel it. Now, my only problem is the Forex prices in it, because we had a shock and then we fell. So I would argue that yes, we are probably going to see. We have to then see, inflation continue to fall, or inflation continue to, growth in inflation and jobs being lost in Canada for me to still believe that theory. Other than it's not big enough of a dent in GDP for it to have an impact.
Sure. Yeah, I mean, that's the thing, is it's a bit speculative by nature, because if you're looking at, the Canadian dollar and you're saying, oh, this thing is going to get crushed, you're also kind of making the bet that tariffs will go into place. We have this countdown period that is going on between, Trudeau and Trump, where they basically agreed, let's push this out 30 days, give some time to negotiate, discuss this. And, if you're making a huge bet on the dollar CAD going up, you're making the bet that those relations will maybe not go so well and favor the US heavily. Or you're making the ruling that, okay, the negotiations will go well, but it will still disproportionately favor the US. That's just kind of part of that story that's baked into this chart. As you mentioned, this huge pop followed by this massive drop is just indicative of that. Okay, there's a lot of headline stuff in here. I personally prefer this pair to the long side at this time anyways, so I've added a little bit of a long position here. If it does go down further, I may add a little bit more. I do a little bit of dollar cost averaging on this currency pair, so we'll see if we get some deeper prices, and kind of just depends what happens with that story. But generally speaking, the US economy I favor right now at this time against the Canadian, but we'll see.
Is the COT data correct on this one?
Should be,
because it doesn't make sense to me.
Let's look.
To have 160,000 less contracts on CAD from one week to another, unless I'm reading it wrong. My brain.
So CAD, they added short contracts to CAD, removed long contract from CAD.
Okay.
Week.
Yeah. Okay.
So that was actually a pretty bearish week for the CAD. They added shorts aggressively, and
okay, there you go. Okay, cool.
Yeah, significantly or slightly reduced longs, significantly added shorts. to the CAD. And look at the net positioning on this, just super bearish the CAD. Number of contracts overall still very much favors from an institutional basis, staying short the Canadian dollar. I mean, that's a 90% short to long ratio. That is very, very aggressive.
Maya, so that includes the reaction from last weekend. So that's kind of like what did the market do in that situation? And they added longs, and then I'm not going to say that they are out, but it's a cause for concern to look for an entry at the moment. But over time, it should be potentially the direction that the market will continue to go in, because with trade wars coming back or being reinstated or actually executed on is not good for CAD at all, especially for the fear and especially for what could potentially happen. Secondly, where if Trump goes too hard, he has so far a tendency to cut the next day and say, stop, okay, I'm not going to do it anymore. So it might be a quick break, stonewalled, hard crash if you try to go with Trump.
So Japanese yen, a lot of volatility, weakest currency, then coming back to baseline, kind of in typical JPY fashion, just a lot of started out as the strongest currency of the day, came all the way down to the weakest of the day. Now it's coming back to the middle. It's pretty typical for a trading day, I suppose. Aussie on top today. This should be helping my Aussie New Zealand position. Yep. So my Aussie New Zealand long looking pretty good. Hopefully going to clear that high 1175. We could also be heading higher. So if Aussie New Zealand heads to fresh highs, I wouldn't mind taking profit around this like 114 area. So I may end up moving. My stop, or my take profit up here, probably within about 30 to 50 pips of this high. So I might bump this up a little bit. But a currency pair like this, we might just see a lot of channeling. So rather than just moving the stop loss and thinking this thing's going to trend aggressively, I just let it kind of channel, hit a take profit and repeat it. And then my big sell trade on this one would be if we hold this high, look for a topping pattern to sell this thing back down to, 107 or 108. That could actually be a really good opportunity in Forex trading this year. If I get what I want on Aussie New Zealand, which would be an awesome resistance level with overbought conditions, and look for some type of topping pattern, then I think that'd be a nice swing to have. Trade it all the way back into the structure. So any type of open space like that for 300, 400, 500 pips, I tend to get pretty excited about. Okay, anything else? Aussie dollar. I'm still holding some longs. They're quite small, but I'm still profitable on the trade. I'm looking to see if the dollar gets a little bit softer, taking some profit around 6,400 on Aussie dollar. New Zealand dollar, still holding some small positions long again. Same thing here around the 58 to 58.60 level, taking some profit. Dollar CAD, no trade. What a noisy freaking currency pair that's been. Dollar Swiss, I'm out for right now. Took my profit on that one. Dollar yen, still waiting to see if we have a good gauge on where the JPY is going. There's two trades on the Japanese yen I'm watching. Either this same high, so we keep going this way, this way, this way, this way, this way, break the structure, then you can sell the heck out of this thing. Okay, or this is a low and the market's going to set up another topping pattern. Okay, you can sell that swing stop loss above the shoulder or above this swing, and then we're looking to get back down to fresh lows, possibly symmetry lows. So this sets up as a topping pattern, then possibly another swing opportunity on the dollar yen. But I wouldn't be terribly surprised to see this thing get back to the highs again. Just more of this. And then you wait for that structure to break. Like, don't force a bunch of trades on the Japanese yen. All right. Pound Aussie, pound CAD, pound New Zealand, I haven't liked in a while. Euro Aussie, Euro CAD, Euro New Zealand, haven't liked in a while. Euro dollar. I mean, again, this 105, 106 zone has been a really solid resistance. If anybody shorted that was a good opportunity to short. Stop loss above the 106 handle. If the dollar gets stronger, I think this conversation is very real that the euro dollar could hit parity again this year, with potentially going all the way down to like 96. I would be a buyer. If we hit 96 on the euro dollar, I would be a buyer. I'd be willing to trade really, really small anticipate a bit of a price pattern and a bottoming, and then take this thing back to 105. So over the next, and look, this is how I think. 12 to 24 months from now, I think we're going to have a monster opportunity on the dollar. I think in the next 12 to 24 months, we're going to have a monster opportunity on the yen. It's just that's probably the hardest one to time. Because right now, and on those trades too, it's like trading currencies. I'm not saying I don't want to trade currencies, but man, if the brokers are charging swap or if they're basically it's negative swap positions. If I'm short the dollar or I'm long the yen, I don't want to trade Forex. Not right now, because just that little like paper cut every single day, or like that double and triple rollover that some brokers charge on Wednesdays. It just chews away, and it's frustrating to watch that, because I am willing to hold positions for like months at a time. So for me, let's say that I turn a position and I make 10 grand. Well, if I had to pay, $500 or $1,000 in negative swap, it's the trade's fine, but it's frustrating when I can make, if I have a $10,000 trade in the futures market, I can keep most of that out of my my contract commission. But if I'm getting dinged every single day for swap, that makes it a little bit more frustrating. But the trade-off is, if it's a good trade, you still make money. And usually when we start to see like an unraveling of carry trades especially, it tends to be a lot more volatility in the market, which means things move a lot faster. So there's still ways to make money there. It's just, you got to be willing to possibly pay some negative swap. So we've got a busy week. 2-day testimony from Jerome Powell Tuesday, Wednesday, CPI, PPI Wednesday, Thursday. We're also right in the middle of earnings season. This is a nice little snapshot for the week. Some notable ones: Shopify and Coinbase earnings this week. Let me look at some liquid ones here. I've got another. This is a good. So Shopify, Zillow, SMCI, that's tomorrow. Gilead, Cisco, MGM, Wynn, Palo Alto, DraftKings, Airbnb, Alibaba. That'll be a big one. So these are some liquid stocks I'm looking at for this week to trade some earnings.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.